Hey guys, my name's Sam Saggers, Director of Positive Real Estate. Of course, there's so many areas where you can invest in real estate in Australia. There's over 15,000 suburbs. The fact remains, of those 15,000 localities, at any one time, probably only 1,000 areas are going to perform, be strong, and actually create you some activity and money in a short period of time. So how do we know when an area is actually boomed? That it's too late. We're buying when essentially the market's going to be soft for quite some time. Let me just share a quick story to illustrate why buying in a soft market or when it's too late is just a bad experience. I bought my first property, in fact, when the market had hit its market ceiling. What does that mean? Well, values reached their peak and they weren't going to grow anymore in price. I put my money into a property, my first property. I put over $35,000 into that deal. And I had to face reality that it was going to be some 5 to 7 years before that property would rise in value again. Fortunately, it was a great lesson and we all make mistakes and pay for education in one way, shape or form. And for me, that was a good lesson. It cost me actually having to resell the property at a loss to move my money into a faster marketplace, but it was a great lesson. So for most of us, if we buy in a marketplace which is going to perform, not perform because that particular marketplace is reached its peak, it's not a smart thing to do. So you need to understand what actually happens when a market is going to reach its peak. So the first telltale sign is actually that that rents start to compress. What happens when a market's going to grow? The first thing happens is rents start to grow first. And then as they expand, there's an old saying, capital growth follows rental returns. So the expansion of the returns means growth comes. But conversely, once the growth has come, the rental returns contract. After expansion comes contraction. After contraction comes expansion. So the telltale sign for you as an investor is to work out what the rents were, what the yield variation was, and what it is today. And I can tell you we're seeing some good examples of that illustrated, for example, in Western Sydney, where we saw rents at around 6.5% at the bottom of the market. Now an average property would rent for around 5.4%. The contractions occurring. And it's very plausible that Western Sydney will contract to about a 4.5% return, meaning there's still a little bit of growth there, but essentially those investors who bought in 2008 and 2009 will see the best of that capital growth. That's how you spot a marketplace contracting. For all the best tips and strategies on all property markets and some advice on what you should personally do when it comes to your property investing, please come along to our property investment evenings. They're held all around the country. Some good tips and strategies for you to implement. So I'd love to see you there.